Well, in the U.S., it's really a very exciting time in payments, and partly because we have this enormous innovation happening in some of our amazing tech centers like Silicon Valley, New York, Atlanta, and meanwhile we have a fairly dated system of regulation that is partly driven by the fact that we have a conflict between federal government and state governments. Think of the U.S. not as one country really, but as one country overlaying 50 separate countries. And it creates this conflict in terms of the regulatory system that has kept it, in the views of some, less competitive than we would like to be. Meanwhile, some of the most amazing innovation in the world is happening in the U.S.
In the UK and Europe, we're seeing substantial change as well, and that's driven by regulation, technological change, and also we're seeing significant amounts of capital flowing into the payments sector, and that's driven, I guess, by the need for growth for investors, and that's being manifested in digital payments, a new democracy, and a move away from traditional payment methods such as cash and checks. At the same time, we're also seeing significant changes in the wholesale space in terms of financial markets infrastructure. A lot of central banks now looking at new models for digitalizing fiat currencies to enable significant movements of capital between different countries.
And our federal and state regulators are recognizing many of those same problems and the problems with our system, quite candidly, and are looking to innovate and to change things. So they are developing new types of bank charters and trying to streamline state regulation. And importantly, right now, we have a new federally governed real-time payment system, the FedNow system, that is going to launch in a few years that could be a real game changer in the U.S.
And I think the important thing is we're at a time of political headwinds and making sure that we have cooperation and uniformity of regulation to enable these significant changes to occur smoothly.